Hello, this is Matt Hobson with Eagle Wealth Management with our August 2017 Educational Economic Update. In this short video, we'd like to talk to you about some of the economic headlines that influenced markets during the month of July, and to give you some insight into what they could mean for you as an investor. After a lackluster start to 2017, the U.S. economy quickened this spring, powered by strong consumer spending, which was helped by a steady labor market. The U.S. Department of Commerce has said that growth in the gross domestic product, or GDP, which of course is the economy's total output of goods and services, expanded at a 2.6% annual rate in April through June quarter. That's more than double the revised 1.2% pace in the first quarter. A slow first quarter followed by stronger growth in the spring has been a familiar pattern over the past several years. Even with this spring rally, though, economic analysts do not think it will meet the ambitious economic growth targets set by President Trump, who pledged to boost growth to rates of 4% or better. For all of 2017, a majority of economic experts believe growth will come in around 2.2%, which is where growth has been hovering around since the Great Recession recovery began in mid-2009. Much of the recent strength in April through June period came from increased consumer spending, which accounts for nearly 70% of all U.S. economic activity. Personal spending grew almost 3% in the first quarter. The economy also benefited from domestic manufacturers' modest reduction of inventory that had acted as a drag on first quarter growth. In other key categories, business investment in plants and equipment grew by over 5%. However, recent housing construction fell by 7%. This comes after a larger than expected amount of housing starts this past winter, when much of the nation experienced warmer than normal weather conditions and thus favorable for building. A national home builder organization has also said that land and labor shortages are limiting the pace of construction, even as the nation faces a shortage of affordable housing. Economists predict that housing will resume growth in the coming quarter. Internationally, the U.S. dollar pulled back in strength at the end of July after recently matching a high point in January of this year and extending back 8 years to early 2009. Overall, U.S. stock futures were pulling back during the month and European markets were in negative territory. But the Dow Jones Industrial Average, S&P 500, and NASDAQ indexes all hit record highs by month's end. Technology stocks generally sold off because of now all too familiar speculations about broad-based overvaluations. A decline in healthcare and industrial stocks also had negative consequences for the S&P 500. And gains in telecoms, energy, and the consumer stocks did not completely offset these losses. Even so, these rate-sensitive sectors eventually felt broad-based gains after the Fed refrained from raising rates. Well, that's it for the August Educational Economic Update. Please remember that nothing we talk about here should be taken as a specific recommendation. As always, if you have any questions or concerns about what we've discussed, or if you'd like to discuss your personal financial situations, feel free to give us a call at 541-330-0220. We're always happy to talk. Once again, this is Matt Hobson with Eagle Wealth Management, signing off for the month of August 2017. We'll see you again in September.